Are you wondering what a supplemental property tax bill is? This video is all about supplemental property tax bills so you're not surprised when you get one in the mail. So you're wondering what supplemental property tax bills are here in this county of San Diego. This video is all about covering what those are. I know it's a super sexy topic to be talking about, but hey, it's really important because it can become a big surprise when you get a bill for several $1,000s 6 months after you buy the house. So we're gonna dive into that. And just real quick, my name is Curtis Chism with the Chism Realty Group, helping folks buy and sell homes here in beautiful San Diego. If I can help you with that, please reach out to me via phone, text, or email, and let's have a conversation. If you got questions about the tax bills, hit me up too. But ultimately, you do want to talk to your CPA at the end of the day. This is not legal or tax advice. So let's dive into what a supplemental property tax bill in the county of San Diego. So when you go and purchase a home, there is escrow, of course, that occurs, and they are going to estimate your property taxes. Now, the seller will have paid property taxes through part of the fiscal year, potentially all of the fiscal year, depending on where you fell. There are two payments that are typically made for property taxes here in San Diego. So depending on when you purchase the home, then that's going to dictate how much was paid by the seller, how much is going to have to be paid by you. So that's going to be worked out in escrow as far as who owes what exactly. So there might be credits back to the seller. Typically there's going to be credits back to the seller, and you might have to come up and pay property taxes. Now the thing is those property taxes are based on when that seller purchased the home originally. So this is where the supplemental property tax bills come in, because here's what happens. Let's just say that you are purchasing a home for $1 million, and that home was previously purchased for $600,000 by the prior owner, say 10 years ago. So there is a spread of $400,000 that has to be taken care of, and that's not taken care of in the escrow account. So escrow is figuring everything out based on the property taxes based on the prior purchase price and any sort of increments that went up from there. So we're talking about a $400,000 spread. So what happens is in 6 months, 9 months, the county will, once they get caught up and do their reassessment based on the new purchase price of the home, and remember, in California, Prop 13 limits property tax to 1% of the purchase price of the home, plus any little local bonds and that sort of thing. So in the city of San Diego, we're sitting right around 1.2% property tax right now. But for easy math, we're going to use 1%. $400,000, 1 million minus $600,000 is $400,000, and 1% tax is owed on that. So that is going to be $4,000 that is owed when the county comes around and issues you a supplemental tax bill. However, they're going to actually, depending on when you bought the home in the fiscal year, they're going to prorate that based on it. So if you bought it, say 1 quarter through the fiscal year, and there's 9 months remaining, so let's say you bought it in September, there's actually 9 months remaining in the fiscal year because it closes in June, then you only have to pay 3/4 of that property tax bill. It is prorated. So they're going to multiply the $4,000 by 0.75. So you're going to owe $3,000. Now, if you bought it halfway through the fiscal year, they're going to prorate it by 50%. You're going to owe 50% of that tax year, and that's going to be $2,000. So that just depends on where you bought it in the fiscal year. So in summary, a supplemental tax bill is the difference between your purchase price and the original owner's purchase price that you bought it from, that $400,000 spread, let's say, multiplied by 1% times the proration where you bought it in the fiscal year, halfway through 50%. So there you go, $400,000, 1%, $4,000 owed, halfway through the fiscal year, $2,000 owed. Now that's going to get caught up because in your loan, if you're making payments into an impound account, that typically is calculated correctly, and then that's already being taken care of. You're not going to pay more later. It's only a one-time payment, typically 6 to 9 months after you purchase the home. So you need to budget and plan for that so you're not caught surprised. Now, sometimes when you are paying into an impound account, you can actually kind of get a pleasant surprise and find out that you actually are owed money back. I recently just had a friend where this occurred, and he got a check for $5,000 and was notified that his tax bill was actually dropping by about $400 a month because they way overestimated the amount of taxes owed. So sometimes it can actually be a pleasant surprise, not the supplemental tax bill, but your impound account. That's a whole different issue. But I hope that covers everything you need to know about supplemental property taxes Reach out to me if you have any more questions. Drop a comment down below. Let me know what you think. If you got more questions, if I can clarify anything, I'll shoot another video for you. In the meantime, if I can help you buy or sell a home, please reach out via phone, text, or email. I look forward to talking to you soon. See you on the next video.